these stocks won't go down 2%. They'll go down 20% because they're volatile tech names, and that's your buying opportunity.
A few of these tech names have had between 10 and 50% gains year to date in a tape that has been only slightly positive. So rotation makes a little bit of sense, I think, for the short term.
And we see kind of a rotation away from those leadership areas in tech, particularly FANG and similar names. Movement towards financials, movement towards energy, kind of a growth to value rotation, very, very much the way we thought markets would play out this year in an environment in rising rates. Bond yields moving higher. This is very typical.
I don't know if a tide's turning for the long term, but, you know, these stocks were extended, I think, on the upside. I don't think anyone would argue with that. It was a matter of when, not if. But right now, you're seeing another home. We're seeing financials, energies act pretty well, and that's why we're seeing this rotation. It's out of tech into some more plays that have more upside potential.
The three most undervalued of the FANGs, if you put Apple in there, would be Apple, Facebook with this correction, and also Alphabet really gets no respect. And, you know, they had a cloud conference last week, obviously great earnings, and a cloud conference and what they're doing there with AI. I think that's a very exciting story. Waymo, the driverless car later this year. So you know, Google's very cheap, Facebook is very cheap, and Apple is the cheapest of them all.
For FANG in 3 days, $300 billion in market cap gone. Is it forcing you to reevaluate some longer-term thesis on any of these names?
I don't think so, but there is some rationality in the market here. The two of those FANG names, the two that had the questionable fundamental quarters were clearly Facebook and Netflix. Those are your 20% correction stocks. And Amazon and Google are, you know, with very solid prints, are off 4 or 5% off of their all-time highs. So the market, at least, I think, is acting rationally in terms of which ones it wants to punish more than the others.
The horse is out of the barn with some of the FANG names in particular, but at the broader index level, technology still looks selectively attractive to us.
Can the overall market, the S&P 500, go up if these 4 or 5 well-publicized stocks do not?
Yeah, the short answer is it can, but it needs at least 2 of 4 sectors to work. And the 4 sectors are financials, industrials, healthcare, and consumer discretionary. So 2 of those have to pick up the slack for just one sector, tech, beginning to go down.
Yeah, and do you think that is likely to happen? I mean, can 2 of those 4 sectors carry the water, so to speak?
Yeah, you know, so far it actually is happening. July was a strange month because tech actually underperformed. And we did have some other sectors pick up the slack, presumably healthcare, but also financials as well.
What's important overall is FANG and tech have stabilized. Look at the FANG names here. Obviously, Apple's leading us here, but I would say stability in Google, Facebook, Amazon.
Apple actually underperformed from the March low till Monday, or right before they reported, by 27 percentage points relative to Facebook and Netflix and Alphabet, all of them, on average. So I think it just lagged. And I think everyone was so jazzed up about owning FANG. They were all worried about owning some of the more cyclical technology names and the China-exposed technology names. So they all poured into FANG. Some of the FANGs weren't that good, and Apple was great.
It looks like there's this 3-way race right now for the next trillion-dollar milestone. Microsoft, Google parent Alphabet, and Amazon all around the $800 to $900 billion in market value. Do you have a guess of who could get there first?
Well, I think what's different with Apple is that Apple has about 10 times more cash than, let's say, Amazon. I think Jeff Bezos is maybe the best CEO in the world right now because he's been able to, you know, create business after business after business, and there's no reason why he won't continue to do that. But he's valued as a growth stock, not as a value stock, the way Apple is. And so you're betting on Jeff's brilliance to continue to open up new lines of business. In the case of Microsoft, it's an amazing turnaround. Satya Nadella has come in and completely reinvented Microsoft in a relatively short period of time. Google is in another very strong position. So you've got, you know, some great companies out there. My bet would be that the next one to go over $1 trillion will be Amazon.